Hey folks, and welcome to the Pipnotic Symposium for the 8th of March 2021. Okay, today we're just going to do a quick review of the results from the algotrader. We're going to run through some of the results that we've managed to obtain since we switched it on just over a week ago. We're going to look at how it's performing now. So if you remember the last video, we talked about the robot, made some modifications to the logic, kind of the core engine of the algotrader, and switched it on Thursday afternoon, and come Friday afternoon we were up about 50%. So we had an absolutely insane trading spree. As expected, some of this was given back last week. We also talked about this in the first video. I mean, nothing can pull in returns that quickly and expect to sustain that growth. It's simply not possible. And so I just want to go over some of the changes that I made, and some of the changes that I am currently testing as well, and also a couple of the trades that the robot has pulled in. But first of all, let's see what's going on with the floating P&L. Currently, we have floating P&L. We have minus 116 Australian dollars. We have a bank profits of 13,678, so 36% profit since the end of the week before last week. So that's absolutely remarkable. That would be a really nice return for a year, actually. But this is, of course, unexpected. I'm still studying, trying to figure out why it went so quickly, and I think I managed to figure out what happened. And just to give you guys a bit of insight as to what happened, I mean, if we go and have a look at the trades, you can see there was nothing for profits for a long time, and then we started to hit these break-even stops. Sorry, the break-even stops just around here. Sorry, not break-even stops, but trailing stops here, which I implemented at the end of last week. And then we started to take more losses, full losses, as you can see here. These are all pretty much full losses, and that's it. Okay, and the reason that we saw such an incredible profitable day that day is simply because that we had expansion Monday, Tuesday, Wednesday, and on Thursday and Friday we had the contraction. So we had a very strong period of bullish price movement, where prices was moving higher and higher and higher and higher, and this is not sustainable. So let's say Monday, Tuesday, Wednesday, Thursday, and let's say the second half of Thursday and Friday, price started to bleed back, which is expected. So we had a lot of buying during the week, and we had a lot of squaring up positions towards the end of the week, and this is what the robot was able to capitalize on. And the interesting thing about it is that if you're looking at this information in one time frame, you're going to perhaps be oblivious to certain things that's happening. And if you focus on this, you can see that we have a very clear kind of a concept of cycles that's quite visible to the normal eye. You can see we have expansion, contraction, expansion, we have positive expansion, contraction, negative expansion, and we have contraction, positive expansion, and we have contraction, a tiny bit negative expansion, and then we contract and move high, as you can see here. But what you can't see on this time frame is what's going on the smaller time frame. So currently I'm trying to conceptualize a way to combine information on for example, the daily, the 4 hour, and the 1 hour, and look for periods. Let's say that we have daily expansion like this, and on the 4 hour chart it'll look like this. We'll have waves, and then the smaller time frames will have small waves within this. And I'm trying to find a way to identify the completion of cycles on multiple time frames at the same time. And this would rather cause the robot to wait to do anything until we started to see the ends of bullish and bearish cycles on the big time frame, for example, the daily, the 4 hour, and the hourly. And that would be very powerful. And that's what we experienced during the open of the robot here And this is why we saw such staggering returns. So this is something I'm working on. I know how to do it in my head. I just have to write the code now, but it shouldn't be too complicated. But it's very exciting nonetheless. But if we look at the results, I have a browser window up here. Here you can see that this is what it looked like. So price raced north. This is Thursday, Friday, and as a matter of fact, on Friday, just before the weekend, we had banked 50% profits and we were up 10%. So if I would have closed all the trades off before the weekend, we would be up 60% today. And then the robot would have opened additional trades last week and this week, which it did not, because we had the floating P&L exceeded risk exposure parameters, and so all it does is just kind of sits on the sidelines and does nothing. And so that's why the robot didn't trade. But the idea of closing trades out before the weekend might not be a bad one, because essentially the sentiment can change over the weekend. So if we had a bearish sentiment, which is what we pretty much had during the end of Thursday and Friday of the week before last, this is when we saw this reversion to the mean, which is why there were so many profitable trades. But if you wait over the weekend, sentiment can change, something can happen over the weekend, and this can cause the market to continue to rally. Okay, and so this is also something that I'm considering, but there's not enough data yet to draw any conclusions, so I simply have to just let it run and do its own thing. But it's looking pretty interesting. We had gross profits of 6,000, so 60%, 61%, and we gave back 25% for that on this account. We had relative drawdown 11%, which is 1.5% greater than the allowed monthly drawdown, which is why the robot was sitting on its hands and doing nothing, because this is not permitted. So the robot didn't trade last week. It still can't trade this week. And so we'll have to see what happens. But I'm going to leave it and let it do its thing. I'm not going to fiddle. Okay, but then we had total trades 217. The largest profit trade was 63. We had a large loss trade, which was 82. And this was probably a commodity, some kind of a commodity, gold or silver. We had the average profit trade is $39.77. Average loss trade is $38.82. So this is pretty much a one-to-one, which is essentially what the configuration of the robot was. If you look here, we have 4.0 here and we have 4.0 here, so these are equal, so that's a one-to-one. And here we had maximum consecutive wins. We had 69 consecutive wins. Maximum consecutive losses, we had 21. So we pulled in $2,700 in consecutive profits, and we gave away just under 1,000 for the losses there. So really interesting. So here we have average consecutive wins, we got 17, and losses we have 7. And so it's looking very good. It's looking very good indeed. It's still very, very early days. We want 10,000 trades before we can draw any conclusions, and so we're still very, very early on in this experiment. But it's very exciting nonetheless. It's going to show some of the configuration additions that I've recently added. So we have a new section which is called trade management. Okay, and trade management is obviously very important. Okay, because you can get into a profitable trade, and even if we have a floating P&L which is profitable or plus, it's not money in the bank because the trade's still open. So you're only earning money when trades are closed. And so we do have something called enable trade management, and when this is set to true, the target is set to 0, so it's not, or rather it's set to something extremely big, like a risk reward of 1 to, let's say, 30. Okay, so the target is very, very far away. And so what the robot is doing in the situation that we wanted, let's say that the robot would have got in at this trade, it would have got into the trade right here, around this white candle, or this candle here, the one just after it. Let's say it was the worst one, so it would have bought here and it would have got out of the trade. It'd still be in the trade actually, because we did not get an opposing signal here, so we would have bought here and it would still be long in the trade. Okay, and so instead of relying on static targets and stops, the robot is putting the stop in, but it's not putting the target in. It's waiting until we get an opposing signal. And so now it's just waiting simply for price to give us a sell signal, which we do not yet have. And so this is going to keep the robot into trades for much longer, which is a really good idea. So as the old saying goes, cut your losses and let your winners run. So this is an attempt to embrace that methodology. We also have something here called enable trailing stops, and when this is the case, each pip that goes into positive, we reduce our risk by 1 pip, and this is just a nice way to ensure that we're not taking full losses. And I experience quite a lot that price goes almost to the target and then it comes back and stops out the trade. I mean, that's a nightmare. That's a really that's an unpleasant scenario, and we don't want that to happen. If we have almost a one-to-one risk reward in the bank, we don't want to take a complete loss, and so this is an attempt to mitigate that. We also have something here called user confirmation, and this is the robot that is telling you that we have an opposing signal. So instead of closing the trade, it'll inform you via a pop-up box saying, would you like to close the trade, because now we have a signal that is which is going in the opposite direction to your trade. And then you can say yes or cancel. So this is just some new functionality that I'm currently testing, and I have it running on a VPS, and we'll see how that goes. But it's pretty exciting. It's a very exciting project. Okay, good. Well, I'll leave it at that. If you have any questions, please drop them in the comments or shoot them in the Discord channel. And thanks for watching.